please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning. You're watching Chartbusters, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks itself. In the next half an hour, I'm Mangla Malu. With me is Reema Tendulkar. Reema, doesn't look like a very good morning for us. We've petered out most of the gains that we saw. In fact, we're lower in today's trading session, and the Midcap index underperforming for the third or fourth straight session in a row.
Yes, absolutely. Since the start of the month itself, the Midcaps have underperformed the Nifty to the tune of more than 6% as we speak. And as he pointed out, it's been a choppy start to the trading week. That rally from the morning dip has been sold into. And as we speak, it's flat on the benchmark indices with the Midcap index down 0.85% with a negative advance decline ratio. All that and more in the next 30 minutes. A quick run through of the top headlines. Ultratech gains over 2% intraday, while Century Textiles slips over 7% on news that Ultratech will merge Century cement business with itself. The deal has an enterprise value of 8,600 crore rupees.
The Nifty PSU Bank Index, that one outperforms as banks are likely to recover about 32,500 crore rupees this quarter as Bhushan Steel resolution is completed by Tata Steel. Winning the bid, the resolution can lead to a 40 to 60 basis points reversal in these banks' provisions.
Amara Raja slips heavily in trade as Q4 margins come in below estimates due to higher lead costs. A 180 basis points quarter-on-quarter decline in gross margins remains a key concern.
Ashok Leyland sees profit booking after the fourth quarter earnings meet street estimates. Management tells CNBC TV18 that they expect 20% growth in the CV industry in FY20.
Balrampur Chini and Reliance Communication in focus as stocks enter the F&O ban today. Just Dial slips 6% as the company comes out of the F&O ban and ahead of numbers later today. All right, let's straight away get to a few technical trading ideas at 10:30 a.m. Ashwini Gujral joins in as always. Ashwini, you were warning, when the Midcap started underperforming, you said that perhaps we're in for a bit of a correction and a sell-off. That's taking place over the last few days. What from here on and your trading ideas?
See, today what was happening earlier is happening. Plus, stocks which are going up earlier are now also coming off. So things like Kotak, Bajaj Finance, etc., several of the FMCG stocks are now coming under pressure. So even now, if you didn't go short in the morning, I think it's a good idea to get short. This Bank Nifty rally, it's already gotten taken out. Chances are there are long positions from the morning and they are likely to get hammered again. So that way, nothing changes. Global cues, no global cues. We are for the moment headed down, and there should be no confusion on that. Having said that, Repco Home is a sell with a stop of 570, target of 540. Bajaj Finance is a sell with a stop of 2130, target of 2080. And Tata Chemical is a buy with a stop of 740, target of 765.
Well, we have moved to the low point of the day on the front line, and this is the Midcap Index 2 sitting with a cut of almost 200 points. Ashwini, a word on SBI, the PSU Banking Index, that one's outperforming today. Do you think it has outperformed only to perhaps fall? And a couple of these Midcap names, HDIL, JP Associates, all these high beta names, what's your view there?
The funny thing is that getting haircuts is good news at some point in the market, but that good news, as is visible, is getting sold into. The evidence of what the market is doing is that Ultratech and Century are at lows of the session. So all good news is getting sold into, and if people are now selling consumer and FMCG also, then that means even there the upside immediately may be limited, and they also may get into a correction.
All right. Thank you very much, Ashwini, for joining in. We'll get chatting later on in the day. Let's move on to L&T Hydrocarbon. That's in focus as the company has bagged 2 orders from Hindustan Urvarak Rasayan Limited, or HURL. The total order size is 3,800 crore rupees. We have Mr. Subramaniam Sarma, the CEO and MD of the company. Good morning, and thanks so much for joining in. First, if you could tell us what is the stake of L&T in the consortium, the timeline of the project execution, and the expected margins that L&T Hydrocarbons could make.
Okay, yeah, good morning to all of you. Yeah, you have asked multiple questions in that one question. But starting from the quoted number of 3,800 plus, I mean, in excess of 3,800, what is stated in the press release is our share. Okay. So the total order value is much bigger than that. We are in consortium with Technip FMC, as stated in the press release, and both the contracts, on both awards, and they will be doing part of the scope, and L&T Hydrocarbon will doing the balance. So I think that's how it is. I mean, for confidential reason, I cannot tell you the share, but the value quoted is our share, because Technip has the practice of not disclosing the actual value. So I think that's one. In terms of schedule, this is fertilizer projects are generally slightly longer schedule because it involves technology, and then we have to buy the licensing, and then we have to develop the design. So it will be in the range of 36 to 40 months before we start up the plant, starting from now. So about three years plus. And
you were telling us about the margins.
Margins, my standard answer is that as per the industry norm. I mean, like, we are in a competitive world. So
what is the industry norm, Mr. Sarma?
I mean, I'm declaring the results, so you can see whatever we are developing. It's on, I've said this many times, I come on high single digits. EBITDA is what we aim to get in this type of projects. Okay, high single digit EBITDA.
So, Mr. Sarma, with this order, what has been the total order inflows for FY19 so far, and what can you guide for? Right.
FY19, this is the first major award. Okay. Of course, we didn't, every order we don't announce. We order announce only those which are of material value. We have backed some more awards, but I would say this is just the beginning of the quarter, right? I mean, now we are in the month of May, so it's just half quarter of this full financial year. To have got this 3,800 plus crores within that first 6 weeks of this financial year, I think we are starting with a strong footing, I would say.
Okay. Again, two questions, Mr. Sarma. One, the order book currently for L&T Hydrocarbon. And secondly, with crude oil prices at $80 per barrel, what does it mean for the company, and how does it impact you all?
Yeah, I mean, the current order book, again, we're going to declare the L&T's group financial results on 28th, I think, and you will see the numbers. But we have over the last 2.5 years had a decent run, and we have been able to pick up sizable orders both in India as well as in the Middle East market, despite external environment being very challenging, continuing to be challenging. And we have a reasonable, stable, healthy order book. But the actual number, you will see it on 28th, and when we announce our results. In terms of oil prices, yes, it is heartening to see the oil prices climbing up after the 3-4 years of slump. And the general sentiment is turning a little bit positive. But there are a lot of factors, as you know, in these oil prices: geopolitical risk, the fear of severe sanctions against Iran, Venezuela as a country going through extremely difficult, so their production has gone down. So there is always also an uncertainty with respect to how long these prices will last at this range. And therefore the investment decisions will be, people will be more cautiously, remain cautious, though there is a positive sentiment. Now, how it impacts our business? Yeah, it's a good news, because the sentiment is somewhere down the line, it should translate into more opportunities for us, and we are waiting for that. But I think it's going to be slow. It's not that something suddenly we are going to get a huge bunch of opportunities. So it will be more like business as usual, with a slight positive sentiment.
All right. Thanks a lot, Mr. Sarma, for joining in and giving us all those details. The key points: EBITDA margins of close to high single digits in that order, with a 3,800 crore share in terms of their revenue. Execution period over the next 3 to 4 years. With that, just keep an eye out on a couple of these mid-caps. Century Textiles is now at the low point of the day with a cut of almost 11%. The deal with Ultratech, Century Textile shareholders perhaps not liking the fact that the EV is much lower than what the analysts gave Century Textiles cement business. Jaiprakash Associates, that one has swiftly corrected 30% from the high, so we'll keep an eye out on that one too. And HDIL too has extended.
The Nifty and the Sensex are down. The Nifty is down 25 points. Take a look at names like Ultratech Cement. From the top of the day, it slipped close to about 4.5 to 5%, completely flattened out. That said, metal stocks are also looking quite weak. So Tata Steel, Hindalco, Vedanta are all down from the top of the day and losing ground in the last 1 hour or so. The mid-cap index is now down over 1 percentage point. Joining us now to talk about the quarter gone by and the outlook for FY19 is Atul Autos. The revenue growth in the March quarter was a whopping 44% and a big jump seen in the company's profitability as well. Jitendra Adya, the President Finance at the company, joins us on the phone line. Good morning, Mr. Adya. It's been a good end to FY18. At least your Q4 performance looks quite healthy. If you could tell us what's your guidance for FY19 in terms of volume growth as well as a revenue growth. Do you expect realizations to improve?
A very good morning to you, ma'am. What we expect that based on, overall positive economic scenario, we expect that we will be surely doing double-digit growth in next fiscal as well. Let us see how the things are going to step up by H1, and we will be able to reconfirm our assessment. About quarter gone by, yes, we were happy that we find that the demand is reviving, particularly from rural and semi-urban side. We find that there is a spurt in the demand, and we expect that this will keep continuing going forward as well.
All right, fair point there, Mr. Adya. But just a view on the volumes. You said double-digit revenue growth, double-digit volume growth as well. Does that mean you'll be selling close to around 47, 48,000 units in FY19? And how much of that will come from exports?
See, export, if you look FY18, we were, able to just get into 13 different countries, and we expect that the seeding which we have done in FY18 is definitely going to deliver us a positive. However, still our numbers are insignificant because it is hardly a year when we got into alternative fuel three-wheeler market. Now, going forward, we expect that in a medium term, that is somewhere between 3 and 5 years, the export contribution will surely, be sizable, somewhere between 20 and 25%.
How much is it right now? How much did you export last year in terms of volumes?
It is 7% as of now, and I expect it will gradually improve in my sales composition.
Okay, so exports to improve from 7% as a percentage of revenues to eventually 20 to 25%, right?
Yes.
Okay, what's your capacity utilization? In Q3, it was 70%. Has it seen an improvement?
See, quarter 4, it was on the almost same, level. But we expect that FY19, we will be able to utilize it above 80%.
Okay, but despite strong revenue growth, how did your capacity utilization not improve from on a quarter-on-quarter basis?
We expect that it will improve. I agree that in last couple of quarters, we could not capitalize on the opportunities, but we have strategy, and moving ahead, it will be completely utilized.
Right. Mr. Adya, I remember the last time you came on our channel, you were very sanguine on the opportunity for electric vehicles. You said there is a market of close to around 10,000 vehicles per month. You are looking to launch your first EV in this year. Have you done that? And what kind of market share are you targeting there?
See, we have already introduced our primitive model in this particular market. I once again confirm that it is completely captured by unorganized players. Right, and the unauthenticated figures are somewhere close to 10,000 a month. We are working upon further penetration along with our technical team is working on advanced version of EV.
So how many vehicles can you sell per month?
See, again, it's in a very introductory phase, so numbers are not that important for us. More than that, bidding is more important.
Okay. You'd already announced a price hike of 1 to 1.5% effective February, right?
No, we are going to have next hike at the appropriate time.
Okay. So you didn't take a price hike because in the conference call last quarter, you had indicated you will take a price hike.
We were supposed to take a price hike, but then we are waiting. There are a couple of things with which we would be definitely taking a price hike at the right time.
Mr. Adya, what is your current dealer network and how are you planning to expand that? Because ground checks suggest that there has been a strong competitive move from Bajaj Auto and the others.
See, as of now, the network inclusive of sub-dealers is around 320 touch points, and we expect that this will keep on improving somewhere between 20 and 25% year over year.
All right. Thank you, Mr. Adya, for joining in. So that's the word from Atul Auto, targeting a double-digit revenue growth in FY19, an improvement in capacity utilization, as well as a pickup in exports. But let's move on to Tata Steel and the development.
That's right, Reema. So Tata Steel has taken over the debt-laden Bhushan Steel by paying 32,500 crore rupees to financial creditors. Banks also expected to receive the capital from New Metal and Arcelor for SR Steel and from TA Steel and Liberty House for Bhushan Power. Lata joins in to analyze the impact on banks. Lata, good news for banks?
Well, yes. This was Tata Steel announcement to the exchanges that they are paying back the banks 32,500 crore. Just one caveat, it's been challenged by Bhushan Steel in the NCLAT, but the process of payment has started, so we can assume that this is the kind of money that will come. And as you said, for SR Steel, currently the bids are between 32,000 crores by Arcelor and New Metal, new second bid, giving them 37,000 crores. For Bhushan Power, the current bids are, the bidders haven't been chosen, they're all under litigation, between 17,000 and 18,000 crores, 3,500 crores being offered for Electrosteel by Vedanta, and Arcelor, if it also pays off the Uttam Galva deal to be able to be eligible, that's another 7,000 crores. The total comes to 90,000 crores. The Finance Minister has made a statement saying 1 lakh crore is due to come to the banks. But let me just put one more point on the table. The NCLTs are on a vacation. So at the moment, after they come back from vacation, whether any of these other deals will get sorted out is a little difficult to expect. So we can work with only 32,500 crore for the current quarter. And therefore, let us look at how that will be divided. Between the banks, SBI's exposure is the maximum, 11,600 crore to Bhushan Steel. So they get about 70% of that. That will mean GNPA goes down by 60 basis points, 0.6 percentage points, and the provision release will be 1,800 crore. Central Bank is the next big guy with 2,570 crore exposure, and GNPA therefore down by about 40 bips and provision release 530 crore. Bank of Baroda 1,440 crores. See, all these are approximates, okay? They've come from brokerage sources, so there could be 100, 200 crore here and there. BOB will get an estimated provision release of 200 crore. Bank of India's exposure is 2,000 crores. That's the stock that's risen the maximum, but it's not the one with the maximum exposure. That gets an estimated release of 200 crore from provisioning, and GNPA going down by 60 basis points. ICICI has a 2,200 crore exposure, a 40 basis point decline in GNPAs, and Axis exposure is 1,740, estimated decline again, 40 basis points of GNPA.
We're at the low point of today's trading session for the frontline indices, the Nifty, the Sensex, as well as the Nifty Bank. That one should come up for you, corrected about 270 points from the high point of the day, erstwhile outperformer, right now sitting in line with the cuts that we're seeing across the frontline indices. And in doing so, we're actually decoupling from the Asian markets, which are currently trading at the high point of the day. The Nikkei, the Shanghai, as well as the Hang Seng should come up for you. That one's trading with a gain of almost 400 points. All of them extended their gains since morning and sitting with sitting at the higher end of today's trading range. In the mid-cap space, we have Ujjivan that has suddenly slipped to the low point of the day, and a lot of these high beta names that we have been flashing on the ticker team for you. But the big story of the day, two stocks on our radar, Ultratech Cement as well as Century Textiles. Remember, Ultratech Cement will acquire the cement business of Century Textiles through a share swap deal. Nigel D'Souza now joins us to give us a detailed analysis, both the stocks of the high point of the day.
It's good news for Ultratech, not so good news for Century Textile shareholders. The basic deal is that, in fact, Ultratech will get nearly around 13 million ton. That's around 11 million ton of integrated cement and around 2 million tons of grinding capacity. The total value is around 8,600 crores, or that's the enterprise value. Let's get to the key numbers. Ultratech Cement on an EBITDA basis, its profitability is nearly 500 rupees more than Century Textile because it gets nearly around 850, 870 rupees in terms of an EBITDA per ton. Century Textile's profitability is far lower than that. But in terms of an enterprise value, well, Ultratech Cement is trading at around $190 per ton, and they're getting this deal at around $100 per ton. So clearly, that's positive for Ultratech Cement shareholders. For Century Textiles, well, the key disappointment is the number is even lower than 10,000 crores. Remember, if we value it at around $115 on a per ton basis, then it comes to roughly around 10,200 crores odd. So that's a disappointment. What remains for Century Textile is the pulp and paper business. You value it, at around 3,500, 4,000 crores odd. And the real estate business, 30 acres of land inwardly, but all that for another day. We'll have to value that at a later date. Century Textiles should open up in the red, Ultratech in the green. The other key question is, will it pass muster in terms of the CCI nod? And finally, will minority shareholders of Century Textiles approve this deal? Both stocks will be in focus. Ultratech, good deal. Century Textiles, well, it's lower than what the street would have been working with.
All right, thank you, Nigel, for that, and enjoy your holiday. Let's move on then to the big earnings expected today. You've got Colgate, which will be reporting Q4 numbers. Shining?
Yeah, shining, because that's what the street expects. In fact, even in a weak market, the stock is up 0.8%. Over the last 7 days, it's up 13% at a record high. So the street expects a good set. 10% revenue growth expected, 1,136 crores is what we're expecting on the top line. The EBITDA likely to grow a little higher than, or a little faster than the top line, 21% growth out there. Margins we're expecting close to 26%, which is an improvement of around 250 basis points on the EBITDA margin front. Net profit seen higher by about 24%. For Colgate, remember, we have the cheat sheet, which is the parent results. They have said that there was positive performance in both India and Philippines. In India, in particular, it was the naturals portfolio that did fairly well. So we had Colgate Naturals as well as Colgate Swarnaved Shakti, which did fairly well. So we'll keep an eye out on that. Volume growth, we're expecting 5%. Remember, that comes on a favorable base. Q4 of last year, we saw a volume decline of 3%. So 5% on that is something we'll be watching out for. GST offsets may perhaps aid the company's margins. The most important thing to watch for in Colgate's numbers, apart from volume, revenue growth, as well as EBITDA margins, I will be keeping an eye out on the market share, what they do, because over the last 18 quarters, the market share has been declining. The current market share at 53.7% is the lowest that the company has in at least 18 quarters, maybe more. I have data for about 18, 20 quarters.
What's the loss in market share?
It's been closer to around 350, 400 basis points. So even at good financial performance, is the company able to stem the loss that they're seeing in market share or not, is something I will be watching out for, and is something on which the street will rate its next hopes on.
All right, thank you very much for that. The other big numbers today include that of DLF, Petronet LNG, Mahanagar Gas, TTK Prestige, Future Retail, Motilal Oswal. Heavy day in terms of earnings as well.